Australia's impending debt bomb. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your hashtag recession-proof instant coffee and we're going to have a look at an article that is warning us about, well, the extremely high levels of household debt here in Australia. We'll look at how it compares to other countries around the world and, well, some concerns that what this could lead to. Now, we all know why household debt levels are so high here in Australia, guys. I mean, what's the biggest expense that we're all borrowing to purchase? You know, a necessity that just keeps getting more and more expensive. So let's have a look at this. So, the man who called the GFC issues a new warning as Australia's household debt levels household debt reaches ridiculous levels. And let's just bring over this little here. This is from Trading Economics, and we can compare. This is our household debt to GDP. And number one in the world is Switzerland. Where is Sweden? We'll see them. They're down there. They're not too bad. And then number two is good old Aussie, Australia. Now let's have a look here. This is Switzerland. We can go to the 10-year data, and we can see since 2016 it was at 120%. During the pandemic craziness, it went up to 136, and now it's back at about 125%. So it's definitely climbed over that period. So it's averaged at 114.92% of GDP from 1999 until 2025. If we look here at Australia, we look at the the 10-year data, it's actually gone down from 2016. We were at 119.7, now we're at 112.7 GDP. During the pandemic, there's not a noticeable spike compared to Switzerland. And if we have a look at, if we go here to household debt, we can go to New Zealand, one of our closest neighbours, the de facto next state of Australia. We can see they had a spike in debt to GDP ratio during the COVID lockdown period. Australia didn't have it. There you go. That's interesting. So we've just been going crazy for a long time, haven't we? So we're below the recent peak. Are we below the average? It's averaged 78.05% from 77 till 25. So yeah, no, we're definitely higher than the average. And we're the second in the world. So there's another interesting measure. This is a great website if you haven't had a look and had a play around. Just all the data that's available here. You can see household debts to income level. And Norway is number one, Luxembourg, Canada, Denmark, Sweden. Where's Switzerland? Are they here? Maybe not. Not everyone has this data. If you click here on Australia, you can see it gives New Zealand, because that's the part of Australia. According to Trading Economics, guys, there you go, it's official. So our economic complexity needs to increase. So let's go back to this article with that in mind. So, an economist who predicted the GFC has sounded the alarm over one key figure in Australia that could push the economy into catastrophe. I mean, as a YouTuber talking about the negative economic news out there, a lot of it is catastrophizing because that's what people want to hear. And that's the reality of it. You just need to make sure you take a lot of the black pills with a healthy dose of how you can overcome them. You don't want to let it drag you down, everyone. Particularly for the younger. There's one young guy watching complaining about how hard it is now, but in the comments compared to previous generations, but he's got a good trade, he's got a good skill, so there's lots of opportunities there for you still. You just got to reach for it. Don't get me wrong, it's going to be harder than previous generations, but there's different benefits we have nowadays. I mean, you now have the access to such, well, let's chat for this. You've now got access to the global wealth of information. You do not have to get diabetes, in your 50s and live a shitty life as you get older. There's knowledge out there that you can gain that previous generations had no access to. You can be a decade or two ahead of government guidelines and health requirements, and you can see them slowly catch up. It's starting to happen now, particularly with dietary guidelines. Look at Diabetes Australia finally admitting keto diets and low carb diets are methods for treatment. So, it depends. Do you want the cheaper houses, an easier time to get a home, but have a shittier life when you get older, or live in the future where you've got access to more information and you could probably have a better quality of life? Maybe that's just the argument. Health is more important than wealth sometimes. An economist who predicted the GFC sounded the alarm over a surge in large Australian mortgages, warning that skyrocketing household debt could trigger an economic slowdown. Yeah, it's probably right. If your debt levels are too high, a lot of it's to do with your confidence as well. Consumer confidence. Let's have a look. Current Australian. We haven't looked at this in a while. Australian consumer confidence. I used to be up on this all the time. Okay. As of March 25, the Australian consumer confidence has significantly improved. Westpac Melbourne Institute sentiment is up 4% to 95.9. Oh, and that is from Trading Economics. So there we go. We'll have a look at the 10-year data. We can see here consumer confidence decreased to 92.1. There you go. So the chat GDP is out of date, but still it pointed me in the right direction. So, we're not doing too bad. We're not in the gutter. We're not in 2020 levels right down here, or just the craziness of here. So yeah. What's the average? Average 100.22. So we're a bit below average at the moment, guys. And that's going to factor into the spending habits of people. If you're more confident, if things are going well, you might, spend a little bit more, or you might hold back a little bit. I know that's what I do. You can tell, maybe I need to do I should start tracking how many 7-Eleven coffees I buy as opposed to my recession-proof instant coffee. And I'll chart that, guys, as a measure, the highs of consumer confidence. So Australian-born Steve Keen, honorary professor at the University College of London, famously anticipated the subprime debacle in 2008 and has long criticised private debt levels in Western economies. Now, Keen is well known as, he's very concerned about the housing market, and he came to my attention when there were articles about him calling for debt forgiveness. I think he's in the MMT sphere of economics. He's developed a model to measure and predict things, but he's constantly concerned and warning and out there about the housing market, the housing bubble. I think he's predicted it to be crashing. So this is not an unusual type of article for him to be involved. And I've just recently seen he's really gone down the YouTube channel path. He's doing really well. He's got it all schmick. He's even got a course out there. He's doing all the things that as a YouTuber you're meant to do to really monetize your channel. And good on him. Congratulations. I'm happy to see that. But you have to bear all of this in mind, that he's made predictions about market corrections in the housing market here in Australia in the past, and none of them have come to fruition. So you can model all you want in economics, but remember, economics is, they try and treat it like a hard science, but there's a lot of art to it too, and a lot of psychology involved as well. So he argues the new 5% deposit scheme, where the government guarantees a first home buyer's loan so they can purchase with a lower deposit and without lender's mortgage insurance, is yet another policy designed to keep Australia's housing price bubble inflated. I wouldn't argue it's designed to keep the bubble inflated. It's designed for those in power to win votes at the next election and address the concerns of the masses. I think it will keep the housing bubble inflated. But is it a bubble? Is it a bubble? Here's the question. You need to look at household income of professionals or people who are full-time adults who are at the period of when they want to buy. And now if you look at that, 2 professionals, 100 grand each, 2 full-time adults, that's average, guys. That's average. What's that? 5 years? 5 times 100 grand? 200 grand? $1 million bucks? Sure, you get less after tax. 5 times for a house? That's not that different to what it was in the past. Okay? We can't we can't compare house prices to an individual income anymore. We got to stop doing that. We need to compare it to a household income. And these days, in a household, you need 2 people working. So it means you get to spend less time with your kids. It means you get to spend less time doing extracurricular activities. People are probably having less sex because they're working too much. That's why no one's having families. Or they have 1 or 2 kids. And maybe that's leading to relationship breakdowns. So that's the frustration I see again and again and again in all of these articles, predicting it to someone's wage. It has to be against a household. You need 2 people working. And if you're struggling to get into a house, you got to find someone to get in with you. I'm not saying I agree with that. I would honestly much prefer that we had a society that valued the roles of parents, particularly mothers, so they could stay at home for a long period, particularly the first 3 years at least, to spend time with their children, to raise their own kids. But I guess that's quite an old-fashioned approach to things. I didn't realize I'm growing into a boomer faster than forever. But I mean, can you see that happening in Australia? Let me know your suggestions in the comments, guys. And I'm saying mothers because, well, they're the most important to the children in the really early ages. When they're young, dad might be a bit of a novelty, but they want mum. Okay, they need mum. So, across successive governments, home buying incentives have become a lazy way to stimulate the economy, but the cycle is reaching its limits, he told news.com.au. Has it? We'll have to see if it's reached its limits. I mean, that's an interesting claim. I want to see how he justifies that. And yeah, I mean, it is their way of stimulating the economy. I know Steve was involved in the Sustainable Australia political party, and I'm critical of some of their policies with regards to population growth. The impact of the policies over time has been the exact opposite of what they claim to do, make homes more affordable. Yeah, the federal government can't make homes more affordable. All the federal government can do is make it easier for people to buy the homes, one way or another. And that will just increase demand. Demand is huge for housing in Australia. It is huge. It's not going to suddenly disappear. Even if you had a housing crash of like 10 or 20%, demand will just eat it up real quick. It's a feedback loop, which the Professor Keane calls a con job, where banks create vast amounts of mortgage credit, propping up consumption and consumer confidence, while also sending up house prices and household debt. The latest scheme encourages young people to borrow more money than they otherwise would to benefit from the wealth levels of older Australians, like Anthony Albanese, who Keane labelled the country's prime real estate agent. Well, Aussie, you got to do it. Remember, he was brought up in a commission house, guys. He did it tough. That's how he can relate to us with his... I mean, there is the concern that our politicians are becoming so wealthy. Maybe we should go to Plato's Republic. So it has to be philosopher rulers that do it voluntarily. The trouble is the government can keep it going indefinitely because the government's got the capacity to create money, Professor Keane said. While the government isn't literally printing cash for every first home buyer, its guarantee is effectively flooding the system with new money because banks can safely lend more. According to Professor Keane, Australian governments have been using that capacity to increase credit to keep housing prices inflated for a year, even as wages and incomes trail far behind. Every time it looks like the rate of growth of house prices is slowing down, they encourage more people to take in mortgage debt, and bang, the money pressure pushes prices up again, he said. Well, anytime the economy slows, they use housing one way or another to stimulate the economy. It's actually one of the most effective ways to get money moving through the economy, spending it on housing. The home builder scheme, where they gave you $15,000 if you spent $150,000. I only realized you couldn't do it on own a builder house. So for us, maybe we should have done it. I might actually have finished house by now. Oh well. Because they get it back in GST anyway, and the $150,000 you spend, and it gets people pulling projects forward. We saw that in the building approval numbers. But the problem is it overheated the market. You had people locked into fixed price contracts, so builders were going bust. In the past, a pump in house prices has led to more money in the hands of older generations and additional demand for goods and services. But if it gets to the point where anyone who goes in for a mortgage is basically cut out from buying anything other than train tickets to get to work, they're not going to spend, Professor Keene said. Okay, so this is his concern, that these schemes will force people to borrow so much, so far, that they will have no additional money to spend in the economy and will lock them in. So everyone's going to go down the Dave Ramsey path, rice and beans, being a cheap bastard, or the FIRE movement, financially independent, retire early, living super cheap, just getting rid of their debts. Now I can't see that happening, not with the majority of Australians. With these 5% schemes, well, it depends. What is the challenge in getting into a house? Is it saving up the money to, well, I would argue the challenge in getting into a house is getting the deposit. Okay? Getting the deposit together while rent's going up, cost of living is going up, all of these other expenses are going up. So you've got to pay rent and all these other costs and then still save a big chunk of money sitting there. That's going to be harder because you've got all these other costs than if you get in with a lower deposit. Instantly your rent is gone. That's probably replaced by your mortgage. And what's the difference? All the money that you're spending on top of rent now can be either spent or put on the mortgage. So let's just say for argument's sake, $500 a week on rent, we'll pretend it's cheap, $500 a week on mortgage, maybe a bit more, maybe $800 on mortgage, and then you're no longer having to pay the rent, you're no longer having to save the money. So if you're saving, well, if you're spending $500 on rent, $500 on saving, and you go to $800 on mortgage, you got $200 extra. And you're building an asset there. So we need to look at it like that too. I think the thing is, previous generations don't appreciate how much people have to save for a deposit now, and how much of a challenge that is when we've got insane rental availability, insane rents at the moment. So it might actually be a better thing. It might be the opposite. You get more people getting in with these 5%, so they've got more money freeing themselves up. What do you think about that one? We'll have to see. I'd like to see some modeling on that. So you're going to get a slowdown of the economy coming out of this, and I think we're pretty close to it because the debt levels are ridiculous. We've topped everyone except Switzerland with the highest level of household debt in the world. Anyone who takes it on can't spend in the real economy. So basically everything's being sacrificed to keep house prices high. Well, I'd like to see the modeling of that, or the evidence of that. I mean, he's made a theoretical argument here, and we're seeing consumer confidence is still at a relatively high level. Can we have consumer spending? Hang on. What is current Australia consumer spending? Okay, here we go. We got this here. Come on, where's my sources? Trading Economics. Okay. Consumer spending in Australia rose 0.9% quarter on quarter to AUD 333.17 billion to 3 months to June 25. There you go. After an upwards revised 0.4% increase. So we'll have to see. I mean, there's the consumer crash right there, where they literally had to lock people up to stop them spending money. We'll have to keep an eye on it. So we'll see if his argument that the 5% house deposit scheme locks people into such high mortgages that they're not going to be doing consumer spending. Or you know what? It could be the opposite. People could have a deposit and just go in with the 5% and then spend that extra saving that they have. I mean, you would hope not. You would hope that they would put the money off their mortgage or invest it if they can get a better return in their interest rates, or put it in an offset account. Anyway, Australia's GDP growth rate has already fallen over the past few years. Okay, now per capita, our GDP growth rate has been below trend since the GFC. So GDP isn't the best method of measuring economic success, but it's what government policy is made upon. It was 1.5% in the 24 to 25 financial year, the weakest year on record since 92, excluding the COVID impacts. The country's household debt meanwhile has been trending up to 112.7, ahead of GDP in Q1 25. Professor Keane said credit had a part to play in a well-functioning economy and could help to boost consumer demand, but only if debt stayed at reasonable levels. If you push it to the stage where it is now, where the banks don't want to lend because they're afraid people can't repay, and people don't want to become debtors because they're afraid they can't service, then the engine peters out. The government can't do this anymore. This is the last hurrah of a policy that only works if there are more people to drag into debt. He said it's unlikely voters would see deliberate policy to bring housing prices down because the major political parties are all beholden to the banks. The top 5 of the top 10 companies by market capitalization are banks. Yeah, Australia is a bank with a country, pretty much. I think it's going to take a political shift before it all falls over. Australia's the last place that will do that deliberately. Yeah, I agree with him here. They will do everything they can to keep it going. Let's have a bit of a chat here, guys. So, honestly, I think the government here in Australia, and we've seen it recently with economic troubles, that they will just continue to kick the can down the road. And with the forecast population growth that Australia is going to have for the next 50 years, they might just be able to do it. Okay? So if you're there critical of the migration, you want it lowered here in Australia, it's going to take a huge political shift to allow that to happen because so much is dependent on it. Maybe we'll look at our population predictions here in the future. Is this going to be the death nail and a debt bomb that's going to grind our economy to a halt? I don't think it will be, to be honest. I think you'll see people will actually be better off going into these situations, borrowing at this 5% low rate. Life might be a bit easier and stable. Not that I'm thinking it's the best policy. I would rather people use their own money. I would rather we turf the superannuation system or let people take money out of that to buy their own houses. Now, housing is never going to get cheaper in Australia unless there's a catastrophic event. Maybe this is the prediction that one's going to happen. But we'll have to wait and see. This isn't the first time predictions like this have been made. What do you think, everyone? Let me know your thoughts and opinions on this one. Take care, and I'll see you next time. Bye for now.